All right, good morning, everyone. Today is January 30th, 2020. Welcome to another Trading Room with Tradingology.com. Good to see you guys again this morning. We'll just get rolling here. Quick little strong move to open the day up, and then we're already starting to retrace, we see. A little bit of a fake out there actually is what it kind of looked like. And we definitely see it bouncing off some of those major pivot points. You guys can hear me okay, I'm assuming? Let me know in the chat if you can. Perfect. My incognito man is here in the morning. Good to see you, Tom. Good morning, Asham. Good morning, Stephen. Andre, good to see you.
Good morning, everybody.
There's Dave. Good morning.
Tom is here.
Tom's in the house, so watch out.
I got to talk to you about that vegan statement you made. It's carnivore, baby, all the way. I'm not kidding you. You know what? I was up at 5:30 this morning. Before becoming 99% carnivore, I could not wake up in the morning before 7 or 8 o'clock at the earliest. And I've been getting up at like 5:30 every single morning. I just have so much energy. It's just unbelievable. Not to get off topic. Sorry to interrupt. Go ahead. I saw Tom in there. I just had to throw that in there.
Oh, absolutely. Asham's asking quick about the volume on this. Is just a standard volume indicator in TOS, Asham, but I just got it marked for up and down candles instead of the basic blue. So nothing special about that one, just straight up volume.
Yeah, how do you color those?
I will pop one open for you here. I'll hit the gear. I want to go into my settings. What are you doing there? None of that.
Tom, I don't know. Do you subscribe to, are you on my Twitter channel? I talk a lot about digital assets on there, but I just posted one about the healthcare system. You might find it interesting. I'll post the link in the chat. I mean, the healthcare system, as probably everybody knows, is pretty messed up, but this is a pretty good discussion between two doctors about the healthcare system and treatments and stuff. But my Twitter handle is Cryptopolis_X. That's the link there, and you can subscribe to my channel if you're interested in digital assets. I do maybe one tweet about healthcare stuff in a month, and this was a good one though. So, Andre, yep, just follow that link and you'll get my Twitter handle.
Yeah, definitely good stuff on there. I recommend for anybody, whether it's just Dave or all kinds of good stuff on Twitter that you can get, and you can customize it for what you want to see. So you're asking about the volume. You just come into the settings for the chart itself, come over to the well-known appearance tab, and you want to have, obviously, the volume showing. So here I'm looking at futures contracts. So first off, you need to have show volume subgraph. I don't want to see it overlaid because I prefer it. I mean, if you could do it, that's one way, but you can also make changes to, there's a couple places. Here's where I say don't overlap the volume on the main general tab. If I overlap the volume, it'll go on the upper study or the upper area, so I want it separate. And then what I do is in the appearance tab, I come down here where you pick what candles you're seeing. At the bottom, you see preset colors, the blue. Set this to color as symbol ticks, so it'll make them red and green. That's how you get this to show up like that.
Tom, I agree with you 100%. He says it's important. What's the point of being wealthy if your health won't let you enjoy it? Absolutely. Agree.
Yeah, you need to be around to enjoy it, right?
That's right.
Some interesting action here this morning. Looks like it can't figure out if it wants to go up or down yet. We're definitely getting some good chop here.
It's going down.
Way down for the day already. I can't read that way up there.
Yeah, it's chopped, but it's going. I think I think we're going to go down, but we'll see. We're not holding those early levels, so I have to kind of keep an eye on it. But I think that it seems like the character of the market has changed a little bit, and I don't know anybody who actually teaches that, but the character of the market is very important. You kind of look at how it reacts to advances and decline. So, if there's not much of a, if it's during a rally, the pullbacks are really important to watch. They're more important to watch than the advances, because the pullbacks will tell you if it's on light, especially if it's on light volume, that there's not much selling pressure going on. And when it's going lower, the advances also teach you quite a bit about the character of the market, because if it's going lower and we get a rally and there's not much volume on the rally, that tells you that there's not much buying going on. So, look at, think about the character of the market. The character of the market is actually really important.
Andre's asking, looking back, it's been quite a while since we had a high probability day. Absolutely. I agree, Andre.
Mm-hmm.
Seems like we're getting a lot more, 60-40, 50-50s, where it's difficult to predict and not have a good bias actually one way or the other when it comes to the vol arb trade. He's wondering if there's a minimum probability you would trade nowadays for a decent chance of success. One thing I would say, I'll let Dave obviously add in his comments too, is like if we pull over the 5-minute chart today, where today was another 60-40, with the market going down most likely, that's typically 80% chance that we're going to have an up on the spread. So looking for any possibility of that. I would, still some days I am trading the, 65% days, but I'm quicker to get out and capture profits than I may have been in the past. So that is one thing that I have adjusted personally, whereas I might not be always waiting for, a 0.3 move where it was more common at the end of last year or middle of last year. So I'm grabbing profits quicker and not just waiting for, if I'm not waiting for one of those perfect setup days. Dave, any thoughts that you would add to that?
Yeah, let's take a look at a longer term chart on the spread, like a
daily
or the 4 hour. Let's take a look at the 4 hour.
We'll pull them both over, because
I think we're hitting like a new. I don't know if it's a new low, but it's you see that flat bottom there?
Yeah, it's like the like the 3.15.
Yeah,
bottom there.
So it's either basing at this point to shoot higher and go into a reversal, or it's going to break through there. If it breaks through there, then we could see going down to 3.0.
Right.
But we've seen that basing. We've seen certain levels hold support before in the VA trade, and so it's kind of interesting. Basically, it's just completely flat there over the last couple of days. That low of a few days ago is holding so far. So watch those technical levels, I would say, on the spread.
Does that help you, Andre? Typical trading day of VA is not to be traded. That's when, so I'm personally looking for a VA opportunity in the morning. If I take it or if I don't, then after that, I'm looking for any, directional trades based on the strength of the day, which kind of evolves to what Dave was mentioning, what's the market attitude doing? Are we high or low? Like now we're sitting at the 33 where this opened up about 24 or 5, where this was looking like a potential nice shorting day, which it still could turn out to be. Looking at some levels, I'll look at directional day trades on the major indices futures contracts based on these levels is what I do. So I'll watch if we're closer to, for 70-20, or 70-30 and to the other side of it, that I'm looking for them while also watching the major cash indexes. So we see the big gaps down this morning. I didn't even move this chart up yet. There it is. See, it's actually bouncing off that SR line there. I
Yeah.
haven't looked at that yet for the SPX.
Yeah, I always check those SR lines because they do provide pretty good insights into, and then we've got the oscillator, the empty oscillator pointing lower. And that's only on a 10-minute.
Yep. I watched the low time frames. Now, sometimes I'll watch the other chart, hey, what's the daily looking like? And then add it together so we see all the MT oscillators going down here. Yep, watch the wrinkle clouds on I'm using the tick charts less just because I'm liking the 5 and the 10 minutes. Because maybe I'm, unless I'm super scalping, then I'll go into the tick chart.
Right.
But that's just kind of how I personally play it myself. I put them all together where I watch the indexes, watch these levels that it might have opportunities, because these will affect other sides too, I've seen. So if we're like today, we see things turning around because this hits a major level, just because this isn't hitting a major level, it will react with these, the way the kind of markets work together. It's interesting. So I keep my eye on multiple things. Yeah, if we're above the cloud, bad volume, taking them the other way, absolutely.
Yeah, and Andre, sometimes I take certain indicators off, put other indicators on. Sometimes, like Dan has the person's pivots on there, and sometimes I'll take them off and put them back on again, or change indicators just to get a different perspective. If you start relying on one indicator all the time, you may be actually kind of in a blind spot by not taking a look at other indicators. So I'll take this chart out, I'll duplicate it, do a detachment, and then put other indicators on the same indexes just to get a different perspective. Every once in a while, that's a healthy thing to do, I think.
Yeah, absolutely. I would agree with that strongly.
So I'll go through the list, take a look through the list of the TOS indicators that are both, strong markets or some other ones, just to get a different perspective. Anything in TOS is fair game. I used to like the Awesome Oscillator a lot before we did the strong market price signals. I think strong market price signals is much better, but sometimes they work really well together too. And there's another one called Q-Stick I've been watching on TOS. That's kind of interesting too. I kind of like that. It's a tick chart, so it does something with ticks.
Interesting. Yeah, so I do have the wrinkle cloud. I saw you asking about that. That is still layered under here, so I'm watching that at the same time. So here we got way above the cloud, and it hit this level.
Mm-hmm.
And we had the beginning of, I'll zoom this down. You can kind of put them together. We're above the cloud.
Down signal, yeah.
Volume starting to come down. We start to get a down signal. There's a move down there. So they all work together at the same time. That we were hitting that SR level on the cash index. So you put them all together. There was a quick scalp down there.
Yeah, see, and that's also why we typically trade either NASDAQ YM, ES, or RTY, because you look at all the other charts, only the NQ was hitting that person's pivot resistance area. All the other ones weren't. They either went through it or they're still far away from it. So that was the setup. The NQ was the setup.
Yep.
Stephen asks, I know it's not the updated spreadsheet. There is no fifth column. That's right. Or did I just miss it? No, if you're talking about the VA videos that we did before, that fifth column now has been expanded out to 10 columns, and we're typically using the 8th column now as the kind of indicator of the cumulative percentage change in the YMNQ spread. So the 5th column is now gone to 10. We typically use the 8 because we found the 8 is kind of the
highest probability, I would say.
Yeah, exactly. It's the highest probability when it hits over 2% that's a change in trend.
Does that help you, Stephen? Yep. So you'll see, like when we peaked out, it'll color in differently. So here it went to a -252. At the same time, the bell curve was at a -10, and that's the highest we had seen for a long time, which actually turned around to a couple days going the opposite direction. So yes, it still does work if you're, over a -2. Doesn't have to be over 2 anymore because we have seen, it hasn't spiked like it traditionally used to, but it will color in like here's another one, -2. The next day it turned around. So that's how you still judge that. Looking for those extremes, looking for a reversal after that point. And Andre says and just a quick update too, in case you guys didn't see the post. This one will be a half an hour instead of the regular hour. So we got about right around 10 minutes left. So if you have a quick question, let us know. Andre's talking about the SR levels quick. Let me pull back over the cash index. Those are drawn after 5 and 10 minutes, right, Dave? SR1 and SR2.
Yeah, SR1 is 5 minutes. SR2 is 10 minutes. And so based on the price action, it'll paint those as support and resistance areas. If SR1, which is the dotted one, is below the solid one, that indicates a negative bias as well. If it's above it, it's a positive bias.
And the farther apart they are, he's asking is, kind of the bigger the move that we've had overnight, that'll definitely make that look different. If they're closer, it's less volatility.
In closer, but it also indicates a large distance between those two. It typically happens at the end of a trend. So it'll be on either to the upside or the downside. When they start to really go spread apart, look for a change in trend.
So look at yesterday; these were on top of each other.
Yeah. Those when they get really, really close, that typically you're gonna get and look at the support level. It held a lot. So in the left side here, it held pretty well until it finally broke through it. But yeah, it hit it perfectly. Tom wants to cover the SPY VIX indicator. So
yeah, absolutely, Tom. And I did send a note to Dave where we're not going to miss that for you. So especially since you're on live with us, so
yeah, and I know you gotta leave early a little bit today. So
yep. So here's the chart right now. He was asking, why you do what number, and if you Tom hasn't seen the spreadsheet yet.
Yeah, so you need to change that to whatever the current level is. I think it's like 22, 23.
Well, we dropped off. So let me pull up. Where's my SPY?
Yeah, dropped off pretty good.
Here we go. So we were up in the 20s. Then
we are at 18. Yeah, I looked at it. 18. So once we get up into the 27 to 30 area, that typically indicates a top in the market, like we saw a few times last week. And then, and then we've gone down to like 18 now. So it's dropped off quite a bit right now. Yeah, definitely. So here's the deal with this indicator. And if you can tell where the tops in the market are when we get into that 27 to 25 to 30 area. And what it does is it measures the difference between the SPY and the VIX. And when the spread it's really measuring the spread between the SPY and the VIX. So as the market continues to go higher, the S&P 500 will go higher, the VIX will go lower because there's less fear. Once you get to 25 to 30, that means there's like no fear in the market whatsoever. And so it's a contrarian indicator. It indicates that there's no fear in the market. So that is typically when the worst things happen, right? If you go back to September of 2018, let's take a look at that period. We were up around, let's see, where was that? Yep, right in there. Is that 2018?
Yep.
Okay, so let's go to July, September 2018 and take a look at those levels on the price ratio. I think it was close to 30. Let's see, we go back to September. It hit 25 on October 3rd, but before that, I think it was even higher than that. So you start to look once you get to that 25 to 30 level, you start to say, hey, look, there's no fear in the market. Nobody's buying puts. Nobody's protecting their positions. And so let's see if we go back. We had a little bit of a sell-off back then too. But we were right up in the top of the range.
In August, got another peak up here.
There we go. Hit the 26 level. So that was once we hit that 26 level, that's kind of the warning sign. So anything between 25 and 30. And then when it gets, so that is no fear, and it's measuring. So what happens is the SPY VIX will start, the spread will start to decline before, this is when the S&P 500 may also be up. And the VIX is starting to move up as well. And what happens is because the VIX measures the premium levels at the money calls and puts on the S&P 500, that means that some big players are starting to see that there's a potential problem with the market, that it might decline, and they're starting to bid up those calls and puts. And that will increase the price of the VIX. So relative to the price of the SPY. So yeah, right in there is a really good example. We were close at an all-time high on this indicator, and it started to decline. It went into a reversal that day, which indicates that the price may have gone up on the SPY, but the VIX also went up, and so the spread declined. So it's kind of an early warning, and there's also, because it's nice because you have this defining level of caution. And when it does reach that 25 to 30 level, you say, okay, look, if I'm in a long portfolio, if I have a large portfolio of stocks, that's an area in which I probably might give up some gains if it continues to go higher, which could happen. But also I want to protect against the downside risk. And then, you have an opportunity then also to pick up very good prices of stocks that you may want to hold when it falls below 10, when the indicator falls below 10. So if we go back to the spreadsheet and we go to December, late December 2018, let's take a look at the levels on that, on the SPY VIX. I believe it dropped under 10. So yeah, go to December. It started going on 11. There you go, right there. I mean, what an opportunity to buy. As soon as it dropped below 10, you start nibbling at it.
Yeah, and 2 weeks there, the up signals.
Yes, every single time that has fallen below 10 has been a fantastic buying opportunity. It happened in 2008, it happened in 2015, August 2015. If we go to, I think it was August 2015, go to that, if we got enough data there. August. Yeah, right in there. Yep, August. There it is, 2015. Fantastic buying opportunity. I mean, we just, and so the nice thing is that these levels are consistent. They're not dependent upon either the price of the SPY or the VIX, but they're relatively consistent. Under 10 is a great buying opportunity. Over 25 is a caution. And it's been working now since 2002, 2003, since I started using it.
Yes, Andre, that is exactly how you enter it. SPY minus VIX times whatever the price ratio is. And
yeah, make sure, check the price ratio, and then you can enter it into the TOS chart.
And yes, the spreadsheet is on the downloads page right underneath the VA spreadsheet. Yeah. Absolutely.
The swing signal down, swing signal up are generated automatically based on the level of that price ratio. So all you have to do is enter the closing values for the SPY and the VIX.
Does that help you out, Tom? Is that what you were looking for?
Yes. Are you getting the price ratio column of the SPY VIX spreadsheet? That's right.
Okay. Yes, exactly.
Perfect. And it would seem Alexander Pope was right when he said that fools rush in where angels fear to tread. Yeah. You don't have to check it every single day. The only thing it does is it keeps the chart honest. I mean, sometimes you don't even you can look at the chart because I think it does help provide additional information visually. But you don't have to change it every single day. It rarely changes. Now that's on a daily chart.
Yeah. So for instance, like if I hadn't moved this to 18 and I left it at, 22, whatever we were at a few days ago, I'll show you.
Yeah. Basically what it does is it zeroes out it balances the, it creates a, what's the word I'm looking for? It creates a center point.
Yeah, so just the signal line will be different. Exactly.
Yeah, the zero line is going to be different. That's all. So what it does is if you have it on a very wrong number, if your multiplier there is like 50 or 40 or 30 or 20 or 10, or it's going to skew the chart really, really bad. So the levels on the right side of the chart, the that it doesn't make any difference what that is really. You want to try to zero it out, trying to get a zero balance. It's the number that you put in there that should match the spreadsheet. The multiplier should match the spreadsheet.
Exactly. So see, it doesn't look much different. Like we were just saying, I just switched it to a 22, where you're not going to get thrown off. Like, hey, I didn't move it to an 18, so I missed something. As Dave said, this is a daily chart. We're looking long term. This isn't for day trading, scalping. This is for long term investing and protecting when things get too high.
And typically, I put that on a weekly. I don't really look at the daily even.
You do weekly? Is that what you said?
Yeah, I do weeklies.
Okay.
Yeah. On the chart. So just to give me a really kind of nice long-term perspective.
All right. I do got 3 minutes to jump to my next fund. So we appreciate you guys as always. It was definitely a quick and dirty today. It's funny how fast even a half an hour goes by.
Yes, it does. It goes by very fast when we're having fun.
Exactly. It feels like it's the fire hose was on again for today. So definitely review it if you need to. I'll post them as I usually do, or I should say as I always do. And you guys have a fantastic weekend and keep the questions coming. We'll cover them as we get them.
All right, Dan, have a great weekend. Everybody have a great weekend. We'll see you guys next Tuesday.
Take care, everyone.
Yep, bye.
Bye-bye.